Many people are not aware, but companies with under 50 employees make up 97% of the businesses in America. Small business is truly America's lifeblood. For business owners and employees whose companies are under 50 employees, I want to share something with you that will surely help regardless of your position. This information can be very impactful to your health insurance costs, an important component of your employment package. Since 2016, small employers with as few as 10 employees have been able to sidestep increasing insurance premiums by a method referred to as level funding. In our market update, we commonly provide these options through United Healthcare, Aetna's AFA, and Cigna. These plans work very much like your fully insured health plans. They have a level monthly premium payment, they have no lifetime maximums, and they transfer the risk for the exchange of a premium payment. But here's how they're distinctly different. They don't have to play by the same set of rules as your ACA fully insured health plans. They avoid several taxes and several fees. These plans allow you to understand the risk profile of your insured employees, and in many cases, you end up paying a much more competitive set of premiums. These plans have a tiered premium structure, meaning there's an employee-only rate, an employee with spouse rate, employee with children, and a family premium. Gone are the member level rates of ACA-based plans. The plan's premium is broken up between fixed costs, which is your network, administration, reinsurance, marketing materials, and commissions, and then your claims are split out and paid from a claims fund. Throughout the year, claims are paid out of this fund. If there's a balance in this claims fund at the end of the runout period, there's a dividend where you get a large portion of this fund back. If you were to exhaust all the claims dollars in that fund, there is no additional charge to you. Okay, long story short, in many cases, better benefits, lower premiums. How do you get a quote? Great question. For groups with over 20 enrolled, we just use a basic employee census, which includes dependents information. And in addition, we're going to need employees' home zip codes as well. Using this data, the carriers run what is called a GRX. It pulls from a database the prescriptions in use from your insured population and then ties those prescriptions back to conditions under management. The computer software assigns a risk score based on this information. And the easiest way to think of it is like golf. 1.0 is like shooting a perfect par. Anything under 1 is even more favorable. And then anything over 1.0 is a little less competitive. The process could not be any easier. And all the time, we're finding companies that have not properly evaluated these highly competitive options. And the question I have for you is why? Groups with under 20 have a web-based risk screener for employees to complete. And yes, it's a bit more involved. But if your goal is to pay a more competitive health insurance premium, it is well worth the time. Plus, we really do make the process easy. In our market update, you can clearly see the competitiveness of these programs. We used a 0.8 on the GRX scale for illustrative purposes, which we've seen groups with even more competitive scores than that. It does not always work, and there are times when it's simply not the right fit, but knowing is half the battle. Take the time and see for yourself just how significant the premium differences can be in our market update today. Click the link below and get your no obligation free quote today. I'm Ed St. Jean with Pro Benefits Plus, and we are simply a better way to benefit.